Welcome to Equal Ground Headlines, bringing you your balanced coverage on trending top stories in Canada. I am Samuel B. Williams. In yet another sobering economic forecast, the International Monetary Fund, IMF, has substantially downgraded Canada's economic growth outlook for 2025, citing escalating trade tensions, global economic uncertainties, and the ongoing ripple effects from the Trump administration's tariff. In its latest World Economic Outlook, released April 22nd, the IMF revised Canada's GDP growth projection downward from the previous 2% forecast in January to just 1.4%. This stark downward revision marks one of the largest adjustments for Canada in recent years, underscoring growing international concern about the sustained damage inflicted by the U.S. Canada trade dispute. The IMF specifically cited U.S. tariffs and Canada's retaliatory measures as primary reasons behind the reduced growth outlook, highlighting how deeply integrated and sensitive Canada's economy remains to American trade policy shifts. IMF chief economist Pierre-Olivier Gaurin-Chasse emphasized that the escalating global trade environment has forced the fund to evaluate multiple economic scenarios. He warned explicitly about the widespread economic damage inflicted by the highest sustained tariff rates since World War II, cautioning that the longer this uncertainty persists, the more severe the consequences will become. Canada's revised growth forecast aligns with similarly pessimistic revisions for other major economies, notably the United States and China. The U.S. growth forecast dropped sharply to just 1.8%, reflecting trade disruptions and rising inflation, while China's anticipated growth fell to approximately 4%, indicating global interconnectedness in trade suffering widespread disruption. For Canada, these revisions are not merely numbers. They represent significant, real-world economic impacts. Economists warn that reduced GDP growth will likely translate into slower employment gains, stalled wage increases, weaker consumer spending, and dampened business investment, creating a broader drag on national prosperity. Moreover, Canada's heavily trade-dependent economy faces amplified vulnerabilities due to limited diversification of its export markets, with roughly 75% of Canadian exports still destined for U.S. markets. Sustained trade disruptions directly threaten thousands of Canadian jobs, particularly in manufacturing, automotive, and resource extraction sectors. The IMF's stark warnings have added urgency to Canada's domestic policy debates. Political leaders currently campaigning for the federal election have rapidly responded, each presenting differing strategies to mitigate economic risks. Liberal leader Mark Carney emphasizes strategic investments to reduce dependency on the U.S., aiming for greater economic diversification into Europe, Asia, and South America. Conversely, conservative leader Pierre Poilievre advocates diplomatic negotiations to resolve tariff disputes swiftly, aiming to rapidly restore traditional trade relations with the United States. Canadian business leaders, for their part, echo the IMF's concerns, urging immediate government action to stabilize trade relations and restore business confidence. Industries hardest hit by tariffs, such as automotive, manufacturing, and agricultural sectors, have called for financial support programs, export diversification initiatives, and streamlined regulatory environments to bolster domestic resilience. The IMF's revised forecasts serve as an unequivocal reminder of Canada's vulnerability within a turbulent global economic environment, underscoring the urgent need for decisive economic leadership. Canada's economic trajectory now hinges heavily on strategic policy responses and diplomatic outcomes in the coming months.